Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the shock decision that the Bank of Russia announced with regards to interest rates. And this decision was actually announced during the 5-hour live direct line with Vladimir Putin phone in, which he's held every year since 2001. So that's about 25 years he's been doing this, where he fields calls from the public where they tell him about their problems and concerns, and he addresses all of those directly. And the overriding message from the direct line with Vladimir Putin was that things are difficult at the moment in Russia, but he's on top of it. He's going to sort it out, and he's open to a peace settlement in Ukraine, but only if the terms are acceptable to Moscow, which is basically the same position as he's had since the war started in Ukraine. But I wanted to talk about this latest reduction in interest rates. They've been reduced from 16.5% to 16%. And if we have a look at this chart, you can see the movement in interest rates over the past 5 years. And we've talked about this before, but immediately following the invasion of Ukraine, interest rates were hiked from 8.5% to 20%. And 20% at that time was declared to be an emergency rate. So they were hiked initially to protect the economy. But they came back down pretty rapidly. And within 12 months of the war starting, interest rates were at 7.5%, which was actually lower than they had been before the war started, which seemed to tell everybody that the emergency was over. However, as you can see, in the middle of 2023, rates started to go back up again. And by the start of 2025, they were sitting at 21%, which was higher than the emergency rate at the start of the war. So that tells me that the emergency had returned, that actually the emergency was worse because interest rates were higher. But over the past 6 months or so, we have seen multiple interest rate reductions to the current rate of 16%. And the reason why I think that the current cut of 50 basis points was shocking is because I don't think it was enough. I think Russia needs to be cutting its rates significantly more than 0.5%. If we have a look at this table, it shows the interest rates of the G20, which are notionally the 20 largest economies in the world. And you can see that Turkey and Argentina top this list. They've got interest rates of 38% and 29%. So if you want to borrow money in either of those two countries, it's going to cost you an absolute fortune in interest every single year. So obviously, they're deterring companies and individuals from taking on any debt because inflation is so high. They're trying to quell spending, bring it back under control so that prices start to go back down. And you can see that Russia is third on this list at 16%, and the only other country in double figures is Brazil at 15%. So Russia is basically being linked with economies that are struggling right now. And if you look at where interest rates are for the majority of the West, they're less than 4%. So 16% is way off kilter with everything else that's happening. This isn't anything to do with what we saw at the COVID pandemic when inflation started to take off and everybody had started hiking interest rates. This is specific to Russia. It tells us that there are serious problems in Russia right now. And if we have a look at the global situation, this is the highest rates of interest in the world for all countries. Russia is actually coming in the top 20 here. It's actually at number 18. So it's got higher interest rates than a lot of economies that you would say are doing worse than Russia. Well, you would think they're doing worse than Russia if you're listening to what's coming out of the Kremlin. But actually, what these interest rates tell us is that things are pretty bad in Russia right now. That's why interest rates are so high. Now, normally when we're talking about interest rates, it's linked to what's going on with inflation because the central banks like to control inflation by moving interest rates up and down. So if we have a look at what's going on with inflation in Russia at the moment, this shows the movement over the last 12 months. And you can see that since March, inflation has been coming down. Now, one important thing to note about this chart is that the scale on the right-hand side does not start at 0. It actually starts at 6.5% and goes up to 11.5%. So we have seen a significant reduction. However, it's all relative. And the latest figures for November show that inflation is now running at 6.6%. And that compares with the target rate of 4% in Russia. So it's still more than 50% higher than the target rate. So that's one of the reasons why the Bank of Russia wants to keep interest rates high, because it's trying to bring inflation down to that target level of 4%. And you might be wondering why Russia's target level is 4% compared with 2% for most developed economies. That's what it is in the USA and the European Union and the UK. Well, the reason for that is because Russia's economy is struggling right now, and it's unrealistic to get anywhere near 2%. It's actually unrealistic to get to 4%. It's not going to happen in the next 12 months. Now, before we go on to get into more detail on this and talk about what's going on with lots of other things in the Russian economy, I wanted to ask anybody that hasn't subscribed yet to please hit that subscribe button, because I'm trying to grow my numbers. It really helps me with the algorithm. It also tells me that I'm on the right track for these sort of videos. So please hit that subscribe button if you have time. And also, I'd like to remind you that I'm currently running a competition to win my beach house near to one of the best beaches in the whole of the UK. Now, this isn't a scam. I've seen some messages, people saying, what's going on? Is this AI? Is this a scam? It isn't a scam. I've owned that property for 15 years. I was considering selling it. The reason I bought it was I wanted to develop it. So I've got planning permission to demolish it and replace it with an amazing 4-bedroom upside down house. But I've moved on from the world of property developing. You may have noticed that I'm doing YouTube these days. I don't have time to be going backwards and forwards to Devon to develop that property. So rather than selling it, I thought it'd be fun to give you the chance to win it. Now, if you're not interested in my house or beaches or having a pint and fish and chips in Devon in the UK, then that's understandable. I'll offer you an alternative of £250,000 in cash, and that's in any currency that you like. So that's got to be quite attractive. This is basically another way of me funding the channel, because YouTube doesn't pay that well. So it's quite tricky to be able to balance the books. So I'm making a lot of videos. The views aren't quite as high as they used to be. So I'm not making as much money as I used to from YouTube. So I'm trying to come up with a more creative way of funding the channel. So I thought it'd be fun to offer this as a competition. If you'd like to support me and the channel, please have a look at the QR code on the screen now. You can take a photo of that with your camera on your phone, or have a look in the link below. I've also linked that, and you can buy a ticket. They're just priced at £5 each. That would be great if you could help me in that way. Really appreciate it. This chart shows the year-on-year movement in inflation in Russia over the past 5 years. And the reason why I wanted to highlight this was really to talk about the long-term problems that have now built up in the Russian economy. So the scale on the right-hand side of this chart does actually start at 0 and goes up to 19% at the top. And what you can see here is that even before the war in Ukraine started in 2021, inflation was running above the target rate of 4%. And at the start of 2022, it had got up to around 8%. Now, immediately following the invasion of Ukraine, it jumped massively and rose above 16% for a short space of time. It then started to come back down due to the fact that Russia had introduced that 20% emergency interest rate. And by the start of 2023, it was sitting at around about 12%. Now, we then saw a remarkable dip in inflation when it got down to 2%, which I don't think really is explainable. I've talked about this before, and nobody really knows how that happened. I don't think those numbers are 100% accurate. And you can see that in 2023, inflation suddenly started rising again. And by the start of 2024, it was above 7%. It then remained somewhere between 7 and 10% for the following 18 months. And it's only recently that we've started to see inflation coming back down. But it's still sitting at 6.6%, which is still pretty high. As we've just seen, it's the third highest in the G20. Now, I wanted to talk about the long-term impact of inflation. And this is one of the reasons why central banks are so focused on trying to keep inflation under control, because if you let it get carried away and start rising rapidly over a long period of time, it's really damaging to your economy. So what I've got here is the annual rate of inflation through to November for the last 5 years. So in 2021, it was 8.4%. 22, it was 12%. In 23, it was 7.5%. In 24, it's 8.9%. And as we've just discussed, it's 6.6% at the moment. So what I've done here is looked at a product that was priced at $10. Let's just keep it simple and talk about dollars rather than rubles. So a product that was priced at $10 in November 2020. So in 2021, with 8.4% inflation, that $10 item would have cost $10.84 because you have to add the inflation for the following 12 months. If you add on the inflation for 22, it rose to $12.14. By 2023, it was costing $13.05. By 24, $14.21. And today, that same $10 item that was selling in 2020 would cost you $15.15. So over the last 5 years, that represents an increase of 51.5%. So that gives you an indication of why high levels of inflation are damaging, because you've got basically a 50% increase in the cost of a $10 item over a 5-year period. Now, if we have a look at this chart, it shows the movement in wages over the same period. So if we look at the movement, 21, there was a 3.3% increase in wages in Russia. In 22, wages actually fell by 3%. That was the year that was most affected by the invasion of Ukraine. In 23, as we saw the movement to the wartime economy, wages actually increased by 8.2%. They went up by 9.1% in 24 as the wartime economy really started to expand. And in 2025, they've gone up by 4.1%. So what that tells us is that over the past 5 years, wages in Russia have increased by 23.1%. Now, that compares to an increase in prices of over 50%. So basically, the ruble in your pocket is worth half as much today than it was 5 years ago. So that is the eroding impact of inflation on your purchasing power. So basically what this shows is that wages would need to have doubled compared to the rate of increase that we have actually seen over the last 5 years just to keep pace with inflation, just to enable you to buy the same amount of goods with your money as you did 5 years ago. So that's one of the reasons why Russians are not happy at the moment. The rubles in their pocket aren't going as far. The cost of living has gone up significantly, but the amount of wages that people are paying has not gone at the same rate. So the standard of living is now going down. Now, if we have a look at what's been going on with food inflation, because this was a topic that was raised during the 5-hour phone-in with President Putin, a few people raised the fact that meat in their local area had more than doubled in price over the past 12 months. And President Putin said, okay, we acknowledge that for people who like to eat meat and protein, prices have gone up significantly. Now, last time I looked, I think everybody needs to eat some sort of protein, whether you're a vegan or vegetarian or whatever it might be. You need some sort of protein because it's really difficult to keep your body fueled without any protein. So I think most of us are in the category of needing to buy protein. Not everybody buys meat, but I think in Russia, there's a high percentage of people who are buying meat. So if we have a look at what's going on with food inflation, this chart shows the year-on-year movement over the last 12 months, and you can see it follows a similar trend to what we just saw for inflation. However, the figures are at a higher level, and the latest data for November shows that year-on-year food prices increased by 7.5%. And if we jump back to that wage table, you can see that wages only went up by 4.1%. So this is causing problems for people, particularly lower income people, because they're spending a much higher percentage of their income on food. And if we have a look at where Russia ranks in the G20 for food inflation, you can see that they're sitting at number 3. And interestingly, in Argentina and Turkey, whilst they have much higher rates of food inflation, that food inflation number is lower than the actual inflation figures. This chart shows the year-on-year movement in producer prices, also referred to as factory gate prices, so the price of a product when it's leaving a factory or wherever it might be in Russia over the past 12 months. And you can see that since February, there has been a huge reduction in the increase in producer prices. And since May, producers in Russia have really been struggling to be able to pass on any cost increases whatsoever. And the latest data for November shows that producer prices year on year are down by 1.1%. So that means that if you're a company in Russia, you're selling your product today on average for 1.1% less than you were this time last year. However, inflation is running at 6.6%. So the problem with that is, firstly, if you're buying anything in terms of your production process within Russia, then the price of that has probably gone up by 6.6%. But you're only able to sell your products for 1.1% less than you were this time last year. But in addition to that, the worst situation is that anything that's imported will be costing significantly more because of the sanctions. So, what this chart shows us is that it is not Russian companies that are driving inflation in Russia, it's other factors such as the cost of imports. So, the sanctions are really starting to hurt the Russian economy. And if we have a look at what's been happening on a monthly basis, this chart shows the month-on-month movement in factory gate prices. And the scale on the right-hand side of this chart goes from 1.2% at the top to minus 1.7% at the bottom. And you can see that in 5 out of the last 9 months, producers have seen a month-on-month fall in their factory gate prices. And in November, they were down by 0.9%. So that's a worrying trend, because what this is showing is that Russian companies are having to cut their profit margins. If you've got increasing costs, if you're paying higher wages, as they are, because wages are continuing to rise, and higher costs for fuel and electricity and all of your raw material imports, then you would normally pass on those cost increases by increasing your prices. But Russian companies are not able to do that at the moment. And so that means that they're cutting their profit margins and making less profit. And lots of companies in Russia are now making losses. And if we have a look at this chart, which shows the annual growth rate in GDP, now these figures are reported quarterly. So we only have the figures through to September at the moment. We don't have the final quarter. But you can see a very clear trend here. Since the start of 2024, there has been a significant slowdown in the growth in GDP. And in the fourth quarter of 24, it was coming in at 3.3%. However, the latest figures for the third quarter of 2025 show that it's now down to 0.6%. And if this trend continues, which it's likely to, then Russia will start to see contracting GDP and may well fall into recession within the first half of 2026. And this really tells us that the long-term inflation problems in Russia are really starting to damage the economy. That's why the Bank of Russia wants to keep interest rates high to bring inflation back down. However, the problem with high levels of inflation is that they start to reduce the amount of growth in the economy, because companies and individuals don't want to borrow money if they're having to pay 16 or 20% interest on that borrowing. So what's the summary and conclusion today? Well, I wanted to post this video because the news that the Bank of Russia has once again cut interest rates is really interesting and tells us a lot about the economy, because there are 2 reasons why a central bank cuts interest rates. Either because inflation is now totally under control, and so you can step back and say, okay, job done. We don't need to keep pushing rates up because we don't want to suppress spending. Everything is now running as it should be. So we recently saw the Bank of England cut its interest rate because inflation is down to 3.2% in the UK, which is still above the target level of 2%. But when you look at the trend, it looks like the momentum is going to take inflation at or below 2% at some point in the near future. So the Bank of England is quite happy that inflation is under control. But when you look at what's going on in Russia, I don't think that's the situation, because inflation is sitting at 6.6%, which is more than 50% above the target rate of 4%. There has been a reduction over the past few months, but it's not that rapid, and we haven't got the same momentum that we're seeing in other economies in terms of slowing prices. So the Bank of Russia isn't saying job done, we can sit back and we're now at 4%, everybody can take a break. What it is saying is we need to cut rates because the economy is slowing down rapidly, and we need to start boosting growth, because that's the other metric that interest rates have a key relationship with. When you cut rates, it makes it more affordable for both companies and individuals to borrow money, and so they tend to take on more debt. When they get that debt, they will obviously spend it. That's the reason why you take on debt, because you need to pay for things. When you pay for things, it helps with the economy, because you pay somebody and then they pay somebody else and they spend money, and you get that multiplier effect. So it's good for the economy if you've got low levels of interest rates, because people borrow money and then they spend money. However, as I said at the start of today's video, I don't think the current cut in rates from 16.5 to 16% is worthwhile. It's actually a bit of a waste of time, because if you think about it as a consumer, if somebody says to you, you could borrow money today at 16.5%, you'd say, I don't think so. That's credit card lending. That's loan shark rates. Not interested. If they then came back the following day and said, I've got a very special deal for you, you can now borrow money at 16%, that makes no difference. Materially, there is no difference between 16.5 and 16% interest. So this isn't going to enhance growth in Russia. And actually, when you think about 16%, even if the Bank of Russia cut rates to 14% or 12% or even 10%, it's still a high rate of interest. If you're having to pay that interest every single year, I don't think that's going to encourage people to take on more debt. So even if they were chopping rates by huge amounts, they would have to go a long way to really stimulate demand for borrowing and stimulate growth. So the Bank of Russia is chipping away at the iceberg, but the iceberg is absolutely massive. So what this tells us is that the Bank of Russia is under pressure not to let inflation continue getting out of control, because we talked about it earlier in the video. When you look at the year-on-year build-up of inflation, it's really damaging to the ruble in your pocket. And what we've seen over the past 5 years is that the cost of living has gone up significantly. Wages haven't gone up at the same level. And so the standard of living in Russia is now going down. And that's why people are complaining. But what we're also seeing is that inflation is being fueled by import prices, because we saw that producer prices are now going down in Russia. So usually when you've got producer prices going down, you'd expect prices to be going down. That's what's happening in China. If you've been following those videos, China's been struggling with deflation. It's actually seen year-on-year falls in prices. And producer prices in China have been going down for more than 3 years. So companies in China are in a world of pain, because they're having to pay higher prices for things like wages and raw materials, but they can't pass that on in their end price. And so they're just taking a hit on their profit margin, and more than 50% of the companies are now making losses. And that's now happening in Russia. We're seeing producer prices going down, but actual prices are going up by a lot, by 6.6%. So the companies in Russia are having to absorb all of their cost increases. That means they're making less profit. A lot of them are now making losses, and that's feeding in to lower growth in GDP, lower rates of tax. They're not paying tax. If you're making losses, you don't have to pay any tax. But that's bad news for the Russian economy. So all of this tells us that there are serious problems right now in the Russian economy. The sanctions are ramping up to make things worse. So they're getting less income from oil and gas, and they're having problems sourcing other products. They're going up in price. So this is all building to major problems for the Russian economy in 2026. And if things continue as they are, it's likely that Russia is going to go into a deep recession, possibly even a depression. And it's still funding a huge amount of cost for the war in Ukraine. And there's a funding gap. And the only way it's going to be able to fund that is by raising debt. And obviously the cost of debt is very high. So there are a lot of really serious problems that are now starting to build for Russia and the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget that you can win my beach house by one of the best beaches in the UK by buying a ticket for just £5. It's a good way of supporting me and the channel if you'd like to see more videos like this. If you're not interested in my beach house, I'm offering an alternative of £250,000 in cash in any currency that you like. So have a look at the QR code on the screen now, or the link in the description below. Thank you so much to everyone else who supported me. If you bought me a coffee or sent me a YouTube super thanks, or signed up as a Patreon, YouTube member, or buy me a coffee member, really appreciate that support. And here's something to put a smile on your face.